Good day to one and all. This is Dr. Sivaram of iknowindices.com. I given the part 1 of tracking live the Forex market webinar, together webinar between 8 and 9:30 GMT. Now I'll be presenting part 2 of the webinar from 1300 GMT onwards. Basically, I explained the trading methodology of my system and also explained how exactly we have to take appropriate trading decision based on the type of moves the players are making in the market. Now, the technique consists of the derived forecast, then the market reading, and the trading strategy to limit the risk and maximize the profit. The derived forecast says today they are expected to make the swing and slide, but they have been making all along the higher level swing with a little slide towards close, that is by 13 GMT. Now 13 to 13:30 GMT is the gap time before the start of the US session. So they are making a nominal dip now, but US session they are expected to make the higher level swing and then drop. So based on these two conditions that they are expected to make more slide, I have taken the decision to take sell positions in the case of Euro and GBP and buy position in the case of USD yen. Now I will show you the slide of the trades what I had taken during part 1. So I kept the sell order at 1.1119. At that time the high was 1.1122 during the part 1 of the webinar, and that got filled during that of the late European session, and then I kept the hedge order at 1.1149, that is not filled, and I got a take profit order at 1.1060, but at the moment the position is filled and it is making about 7-8 pips profit. In the case of GBP, the high what they set at that time was 1.2942 during that of the early part of the European session. So near the high 1.2938, I kept the sell limit order that got filled during the webinar time. And I was telling you that they are expected to make the slide. What happened? I kept the buy stop hedge order at 1.2958. And suddenly during that of the late European session, they just gained the level to 1.2978. So automatically my buy position, buy stop 1.2958 got filled. So in 30 pips range, I got hedged. 20 pips range, I got hedged. So once it is hedged, then automatically I find that the position is making profit. They quickly gained it to 1.2968 and 7275 like that, and finally went up to 1.2978 and stopped cutting the new high for about 30 minutes. Then I used the trailing stop of 5 pips, and that got the position closed at 1.2973 with 15 pips profit in the buy side. Then I kept the new hedge order at 1.3003, that is from that of the profit booking level. 30 pips above, I kept the hedge order to limit the risk. So I booked profit. So even though there is a gap between that sell and the buy limit is about 70 pips, but I already booked 15 pips profit, and then kept the hedge order to lower it now. So as they make the slide, then I'll bring it back to that of 1.2958 once it goes further down below. Then in that case, what happened? This becomes the profit, and I keep the hedge order at the same level. Then once they go below that of 1.2938, I will keep stop at entry and trail the stop until I'm able to close the buy position, close the sell position. Now with regard to yen, I kept the buy limit order at 112.30, and suddenly they made the drop by 12:55 GMT. It got filled, and then also the sell side hedge is also filled at 112. Currently, the market is trading around 113.83 level, and I kept stop at entry at 112. So if they don't make for the drop during that of the session, gap time I will not close it. So during the session, in case if they don't go below that for 30 minutes of my observation, then I'll book profit on the sell side and then keep another hedge order similar to that of what I had done it in the case of GBP, and wait for the rise to happen. Then I will trail the hedge order to that of 112. Then I'll keep stop at entry at 112.30 once they go above that, and remove the hedge order and try to book the profit on the higher side when they start making the rise. So this is how we can do either way trades in the market. So it all depends how we perceive the market, because in the market there are buyers as well as sellers, and someone will be making profit at a given time, the other person will be making loss. What the players do is they act against predominant of the traders. If predominant of the traders are sellers, they quickly gain and make the upward stop point. And if we don't use the hedge order, instead if we use the stop, what happened? Our stop will be filled, then subsequently they could make the slide. For that, we won't be having a buy position, sell position to book profit, because we may not be able to enter at the highest point at every trade. So it is next to impossible, because we won't be knowing up to what level the players are going to gain the level, either by using the chart study or statistical analysis, anything. You will not be able to find the turnaround point, because this point is being determined based on the cluster of stops at those levels. If the stops are slightly little 1 or 2 pips higher, they will try to make an attempt to close those stops. So when they hit the stops, that becomes the profit for that of the players. So that is why they just make the rise like that. It is not that they have to honor the technical analysis and then try to go there and afterwards the selling pressure starts, etc. They are all nothing but hypothetical condition that once they go to that of the resistance, the selling pressure starts. So if you ask any trader, when it goes to that of the highest level, are you willing to take the sell? He will say that no, I want to see whether it can go further high. Then afterwards, I will try to take the sell position. So in such a scenario, who is going to take the sell position? Already the players are holding high and building sell position. It is not that at that point they are going to take sell position, because if they wanted to sell all their position at 1.1124 in euro, there should be matching buyer. Only then they will be able to sell. So always they sell in a range of 15 to 25 pips, sometimes 50 pips. If the market is having a very good volume, to 50 pips range, they make the swing up and down move or a higher level consolidation and build a sell position. In the case of GBP, from that of 1.29 20 to 1.2970, they are building sell position nearly 50 pips. Then we may not be able to perceive it now, but once they start making the slide from that of European session and also from tomorrow and Friday drop, then we will be able to understand, okay, they have been holding high and building sell position. But what is more important for us is when they are building sell position, we should be in a position to take part in the market. So for that, we need to read the intentions of the player and the type of moves they are doing it based on the time frame. Now this gap time, they are making a small dip. After making a small rise around 1305, they're just making the dip. So we have to see how exactly they are going to open the US session by 13:30 GMT. Now let me explain to you So these are all the timings. The current market condition using the live market code page. If you look into that of the live market code page, you find that Euro has gained about 30 pips, GBP has gained about 44 pips as a net change, whereas USDN has dropped about 134 pips on the downside. This is mainly to drop the yen crosses. If you see yen crosses, Euro yen has dropped about 117 pips. GBBN about 128, 29 pips. What will happen? They will hold the low and start making the slide in the case of Euro and GBP, as well as Australian dollar as a contrarian move in order to move down the market further down. So this way, when they make the contrarian move, yen crosses will come down. So that is why they are doing it like this. And afterwards, they will quickly gain the levels in the case of yen, USD yen. Then Euro and GBP also, they will gain the level. Then after making extended downward stop and yen crosses will bounce back. So this is what they are doing every time. So we need to understand how they intend to make the moves in the case of crosses. Then accordingly, if we take the positions in the case of crosses, then we'll be able to get the real benefit. Instead, we look into that of the technical analysis of the crosses, we may not be able to see the profit in most of the occasions. So what is most important thing with regard to trading Forex or trading any market for that matter? We need to find out whether they are making quick moves or slow moves. Quick moves or false moves. So here you come across three types of quick moves, namely the stop and false move and the extended move. These three are all quick move. The only difference is the stop and false move happen less than 30 minutes and the extended move happens in about 2 hours. And so based on the type of move, they are being given the names as stop and false move, extended move. And what is intentional move? It is a slow move. They either start making the slide or the gain slowly as an intention. And in that process, every 30 minutes, they will just breach the new high and go above or breach the new low and go below. And that is intentional move. That will happen for about 2 sessions. And the start of the 3rd session, they reverse the market. So during that time, you can calmly wait and do the intraday trade whenever they are making the intentional move. We can easily differentiate the intentional move that they just make an upward stop and followed by that slow slide up to that of the low, then start breaching the low and stay below there for 30 minutes and slowly come down. Pip by pip, they will come down, and that is intentional move. So watch today during that of the US session, how they are making the intentional move on the downside. Then we'll be able to really appreciate or differentiate the extended move, stop and false move, etc. from that of the intentional move. The swing is the move which they have make between the high and the low or near that of the high or near that of the low during that of the mid session while they are handling the crosses. And I was explaining to you during that of the European session that they were showing positive net change in the case of Euro and GBP and negative net change in the case of Australian dollar. So Euro and GBP are showing USD weakening move and Australian dollar is making the USD gaining move. Similarly, in the case of Canadian dollar, which is making USD gaining move, and yen and CHF, they are making the USD weakening move. So in the case of majors, they make the USD weakening move, and the commodity pairs, they are making USD gaining move. That means they are handling massively the commodity crosses, by making contrarian move, and also the yen crosses. So they always make the moves in sequence. First they handle the commodity crosses, then the N and N crosses, and then finally then the majors in a big way as an extended move or extended stop, and then finally they handle the European crosses. So you would have noticed yesterday that European cross, they have been holding euro in positive net change and GBP in negative net change in order to gain the level in the case of euro GBP to 0.86 area. That is how they do it. And now you find that GBP also gain when euro is just holding near that of the high, then automatically euro GBP start making the slide. So this is how they handle the crosses. So now you find that euro GBP has dropped about 25 pips because the pip value is very high in the case of euro GBP. It is to double the amount. So you need to understand how they are making such moves. Only by bringing in the moves in the case of majors, they handle the crosses. It is not the influence of the cross moves in the crosses over that of the majors. It is something like telling the small kid is hitting the father and the father finding it painful. No, not at all like that. So the small crosses with a lesser volume cannot have any sort of influence over that of the majors. Only the players find out when, where, in which position or which currency their traders are having bulk position first of all. If the traders hold a long position, then the players drop and hit their stops or induce them to liquidate the long position. If the traders are predominantly short, then they gain the level and induce them to do the short covering. In the process, if you use hedging, what happens? Even if you have unfavorable position, your hedging will be making profit when they are making the unfavorable position for predominant of the traders. At that time, you can book profit in the hedge, and then when they start making the opposite move, when the traders have turned from bearish to bullish feel and start buying it, then the players start making the slide. At the time, your sell side, you can book profit. So if you look into that of the positions what I have taken, so euro is now in the money, it has come down slowly. And in the case of GBP, they are still holding around 1.296669 level. And the hedging is there at 1.3003. And 13:30 GMT, the US session starts. Then they will make a small firm up and then start making the slide. Session start, always they will try to pretend and make the opposite move. So if they make an upward firm up move, then that will indicate that they wanted to make the slide. So you can easily understand that and then accordingly take positions. In the case of yen, they are making for the drop. They have formed with a new low 111.67. Now let me show the other slide. Okay, now this is a focus slide. So I explained to you that they are expected to make the swing and drop during that of the US session. Then followed by that tomorrow, they are going to make the dip and firm up move during that of the Japanese session. And then during that of the tomorrow European session, they are expected to make the slide again in the market. So you'll be able to understand how they are holding and building sell position, start slowly sliding towards the weekend and then firm up during that of the US and the Japanese session of the Friday, then quickly gain the level to hit the stops of the short sellers and then start making this drop during the US session. So that is how they are expected to make either way moves. What they are trying to do in the middle level consolidation, they are holding near that of the high and building sell position before making a drop to buy back against the sells. What they have done near that of the, during that of the lower level consolidation with a frequent downward stop, and they accumulated huge buy positions. Euro in the case of 1.040506 level and GBP in the case of 1.212223, etc. Those positions they have been doing the churning, that is gain about 150 pips, drop gain about 150 pips, drop. That way, they buy and book profit after the rise and again drop. That's how they have been doing it. So every time they make about 100 pips profit, that after accumulating the profit to that of the buy side, the remaining position, they start buying from that of the higher level. So what will happen? The average will go up, but still, because of the profit added, it will be still lower than that of the actual market level. So that is why they do that. So if they have huge buy position around average of 1.23, and when they make their buy again at 1.29 or 30, still their average buy will be around 1.24. Still it will be making profit. Why they do this? Because of accumulated profit. Why they do this? In the event of a sudden knee-jerk reaction in the market and somebody dies or something like that, natural calamity, then they should be able to exit out of the position without making loss. That is why they use it as a precondition of churning the market before making further rise. So what they have done, they gained the level, holding high. Now they are building profit with regard to their buy positions, what they accumulated at the lowest level. And then they will drop to the intermediary lower level and start buying again with a downward stop point, and then start gaining above that of the current high and then again drop. So they will do 2-3 times this way and accumulate the profit, exit at the higher level, buy back at a nominally lower level from that of the high. So with this profit, they will start accumulating new higher level positions. So they will gain it to that of further 300 to 400 pips on the high side. Still, their average buy level will be lesser. Then again, they will start booking profit and then drop. So how will you differentiate this? Because in the middle level consolidation, they will make either way stop ins. So upward stop in followed by downward stop in, upward stop in followed by downward stop in. If you watch USD CAD, you'll be able to understand how they are doing it. So after doing that, upward stop in followed by downward stop in, either way stop in, then they will gain further upward and rise it to the new high and start making the high level consolidation with upward stop it alone. Lower level, they will make it very sluggish move, but higher level, they will make frequent upward stop it. That is, when the traders think that it has reached the highest level and start taking the sell position, the players hit their stops, induce them to buy it at the highest level. Then again make a slide, then the traders will think that it has breached to go on below that of the resistance. So they will start taking the sell, then again they will gain back, hit their stops. So that is how they induce the traders to follow technical analysis and take appropriate position following the guidance of technical analysis. Then further, what happens? The players hit their stops. And those who follow it sincerely, if they lose it, they don't talk about it. Any trader who lost the money in the market will not open the mouth. If somebody has made about 100 pips profit in a single trade, he will just talk to everybody that I made a huge profit yesterday and things like that. But nobody will say that I made a huge loss yesterday. So this is the normal human tendency. That is why the players are not exposed again. And also you find that such analysts, they only caution the traders that trading is risky. And if you lose money in trading, then you should not affect your lifestyle. That is how they try to say that with a disclaimer. All because they know predominant of the trades, they lose money. And that is why you come across, after doing extensive trades, they find that they are not in a position to earn consistently from the market. Then in the process, they become advisors to others. So these are all the levels in which the currencies are expected to swing. That's what I showed on Monday. I was supposed to show on Monday, but since I was not able to present the webinar on Monday, I'm just showing it to you. And how exactly they are just gaining the levels now. No? In the case of euro, afterwards they are expected to drop. In the case of GBP, again they are gaining it in order to drop. In the case of yen, they are expected to come down further. And in the case of CHF, they will be swinging around this level or make another 50 pips downward move. And in the case of Canadian dollar, they are expected to make further drop afterwards in this week. And also in the case of Australian dollar, they are expected to slowly gain the level from today. So you will come across a contrarian move of Australian dollar from that of the US session. When euro and GBP are dropping, Australian dollars, they are expected to gain the levels. So that's how the contrarian moves they will make during the of the different sessions. Try to understand how they are making it, and that will be helping you to follow the market carefully. So if you got any question, kindly ask me. I'm willing to answer those questions. So the forecast is a broader outline. We fine tune the forecast using the market reading technique, and market reading I'll show it to you. So we are noted down the initial lows and the highs in all the currencies. You can just find out euro formed the low 1.1080 and the high was 1.1115 initially around 3:30 GMT. They went up to 1.1124, start making the slide. So they are expected to breach this 1.1080 during that of the US session. Already the US session has started. So let us watch how exactly they are making that move. Then we will be able to understand that forecast is dependable. Then in the case of GBP, 1.2912 was the initial low. They just breached and went up, made an upward stop, and above that of 1.2931 and started making the slide. They are holding above that. This is an extended move, holding it for about 2 hours and then start making the slide. In extended move, you know that they quickly went and formed the high. Afterwards, they are not breached the new high, even during close of the US European session. Now they have started making the slide. Slowly they will come below that of 1.2931 and then slowly come below this and finally below 1.2906. Then we will be able to understand it is the intentional move. Then in the case of yen, 112.43 is the low. It just breached and came down, and 111.59 they just formed the new low. It shows that they are making the intentional move on the downside. So slowly they are cutting the low and going below. So in that process, we have got the hedged position in the case of yen. We will try to maximize the process, wait for 2 sessions and the start of the 3rd session and book profit around 112.12 level. What we are taking the sell, we will try to book profit, keep hedge order. Then the next day they will gain the level. At the time we can trail the hedge order upward until we are able to keep stop at entry in the buy position and book profit on the buy side as well. Then in the case of CHF 98.26, they just came down to 98.08 and then holding below that of 98.26. So they will be holding here and then start making the rise during that of the US session. Then Canadian dollar 36.04 was the low, 35.79 they came down to, and they're just gone above that of 36.04, indicating that they wanted to gain the levels during the US session as the USD weakened, gaining move. Then in the case of Australian dollar, 0.7411 is the low. They just breached, as I told you. They will make only a sluggish downward slide in the case of Aussie, so it is not worth doing sell and buy trade, and they will be holding it slowly and start gaining above that of the initial low during that of the US session. So the market reading indicate that they wanted to make the US dollar gaining move in most of the currencies during the US session. So by doing the market reading, we will try to hold the positions calmly and try to earn. So if there are any questions, kindly ask me. Since no question is coming, I will show the focus slide. So because I'll be coming back again on Friday. Sorry. So tomorrow, Thursday, they are expected to make a dip and firm up during Japanese session, swing and slide during that of the European session, and then swing and firm up during that of the US session. In Friday, I'll be giving the Asian session live market analysis webinar. At the time, I'll review the forecast, what I have given it, swing and firm up during that of the Japanese session, swing and rise during that of the European session, and then swing and drop during the US session. They are the expected moves. And next week is the 4th week of May. They are expected to make the swing and rise moves again in the case of Euro and GBP, as well as USD and USD CHF as a contrarian move. So if you want any question, kindly ask me. Otherwise, I'll conclude the webinar. Market timings, I explained to you, and also how to read the live market code page and the type of moves, and also how we can handle the hedging. That is, in the event if the position is hedged, when the hedging is not making profit for 30 minutes of our observation, we close the hedge with 2-3 pips loss and keep another hedge order to limit the risk. When the hedging is making profit, like how now the end position is making profit, we can keep stop at entry and wait. And when they start making the slide and stop cutting the new low for more than 30 minutes during the session, we can close near that of the low, the sell side, and keep another hedge order, and then trail up the hedge order when they are rising the market, and keep stop at entry in the buy position and book profit on the buy side also. That way we can do either way trades using hedging. My contact details are given here. So those of you wanted to get further clarification or any other detail, they are shy away of asking questions in a public place, you can always contact me, and there won't be any strings attached. You can contact me through email or the chat. There is Yahoo chat or the Skype chat. I'll be willing to answer to you. If it is very essential, you can give a call. Okay, no more questions coming. I'll try to conclude the webinar. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I'll come back on Friday and try to explain to you the expected market moves during the Asian session live market analysis webinar. Wish you all the best in trades. Try to read the intentions of the players. That will eliminate your market fear. Then you will start making sensible trades. Wish you all the best. See you on Friday.